Good afternoon, everyone, and welcome to the Stock Market Today by Investors Business Daily. It's July 25th, and I've got Ed Carson along with myself, Justin Nielsen, to kind of break down the action of today's market. We had some up action in a lot of the stocks, a lot of the indexes, and there are a few stocks that you've got that are kind of looking like they might be buyable right here. What do you got, Ed?
Miniso, Nucor, and Synopsys are three stocks from a few different areas of the market.
Yes, we are seeing again that kind of theme of breadth expanding here. But just let's go ahead and go over the indexes real quick to see how they closed. Looks like the S&P 500 ended up about 0.3%. Nasdaq Composite up 0.6%. It was up a full percent, I think, earlier. The Dow Jones Industrial Average still eked out a gain with 0.1% for its 12th gain in a row, the longest streak since 2017. And then the Russell 2000 was basically flat. So we've got a lot of earnings coming in this week. We've got the Fed that started their meeting. They're going to be giving their announcement tomorrow. Gosh, a lot to think of. What should investors be doing right now, Ed?
I think for the most part, investors should be sitting back and waiting to see what happens. There's not a ton of stocks flashing by signals. There's some, and there were some others out there, but there's so many earnings, and then the Fed that could completely roil things. And I just feel like, for the most part, I mean, investors should probably be having pretty decent exposure, but then not adding to that. If you have a good cushion on some of these stocks, you want to ride through earnings season, that's fine. But just a lot going on in the next few days. It may feel a lot clearer out there. And if you do feel like the need to buy, I mean, do so really small. You might want to think about doing it in non-tech areas where there's not quite the crush of news. There's some places that are coming up, like commodities, like a few other areas, but a lot to look at, a lot to watch, and definitely be paying attention.
Well, and I guess that's one of the problems in tech right now is that everything just seems so extended. It's kind of like if you didn't buy already, you're buying these way up there when the chances of a pullback could be a little bit increased.
Yeah, we still have, after all this, is that we have, the NASDAQ is 5%. That's actually 5.4%. That's about the areas where it starts feeling extended. So even though we had a pullback, again, it never really is getting that big pullback. We haven't even touched the 21-day line since early May. Even the S&P hasn't touched the 21-day for 2 months. And it's just sort of like a little bit of a rest, a longer rest would be nice to develop that and then have a little more room to go. But this market doesn't want to go down. So if you have good exposure and you have good stocks, you can maybe ride these things out and just sort of like, these sort of little waves and sort of ride up. If you go through this and this and this, it's hard to buy something new. But if you have whatever you have, that's probably doing pretty well.
Yeah, especially Nasdaq Composite getting support at 14,000 recently. As you mentioned, didn't quite come to the 21-day. So for those folks that were waiting for a pullback, maybe to the 50-day, I mean, they've been disappointed. So what do they do if you're like light exposure, waiting for that pullback that just doesn't seem to be coming?
Yeah, that's where the risk reward, where, you want to be, see, when you say, well, it's risky to be buying early on, like early on in a rally, the problem is the downside is that if you wait too long, well, then things are extended. So there's never a perfect time to buy in the sense of it's obviously going to work. Because if it's obviously going to work and it's a guarantee, well, then it's going to get priced in. So, you just sort of be looking for things. At this point, you may have to wait for a little bit more of a pullback and wait for at least to say some kind of situation where you can see setups again. This is why you don't want to wait months into a rally.
And that's why sometimes those incremental moves, if you start a little bit small early on and let the market kind of tell you, oh, hey, your stuff is working or it's not working, that can be one way to build a position. But let's go ahead and take a look at, the S&P 500. Again, as you mentioned, this is showing a lot of strength as well. Above 4,500 and really hasn't given up much ground. On its way to 4,600. And if you look at the weekly chart, I mean, we're knocking on heaven's door for new highs, right?
Yeah, and actually, we hit a new high for the rally today. We backed off, but it was did get to a new high. Intraday for like a 15-month high. Yeah, we're not far away from the all-time highs.
hmm And the Dow Jones Industrial Average, now, for a while there, that was the leader off of the October bottom. Then it kind of seemed like it went away for a little while, and now here we are, uh, Dow Jones Industrial Average with a 12-day winning streak.
Yeah, and some of those gains are pretty good. Today was small, but that's impressive. Finally got through this area, and just sort of got through there. It does show you that there's pretty decent breadth. I don't think the breadth was super amazing today, but it's really nice to see so much strength. And the Russell is also looking better. This is the ETF that tracks the Russell 2000. I didn't do a whole lot today, but it's knocking up at least on 2023 highs.
hmm
So a huge improvement when just a few weeks ago I was struggling to get above the 200-day line and whatnot. And actually, today's performance was pretty good since regional banks did. The regional banks didn't have a good day, and this held up.
Okay, so maybe we take a look at like KRE, regional banks. So that might have been putting a little bit of pressure on the Russell 2000, which does have quite a bit of regional banks in there. Was there any particular news here?
Yes, there was. Pac West plunged today, and it looks like what's going to happen here is this has been one of the banks that was having the most trouble with deposits and everything. Uh, I don't know if anything has broken the last 5 minutes since we've been on, but the Wall Street Journal reported that Bank of California is in talks to buy Pac West, and obviously investors were thinking that Bank of California would be getting the better of that deal. So this one jumped up. Pac West tumbled. Didn't see a ton of weaknesses. We didn't see a meltdown. Of course, this could quickly come back. Sometimes we saw some of these things where it just sort of drip, 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 and then it's sort of like a waterfall. You're getting near the rapids, and then it's just like fall off. I'm not saying
hmm
that's going to happen, but sometimes things, oh, that's not so bad, and then it just kept on going, and then it crashed. So far, the regional banks don't look so bad.
Yeah. Well, and it's also a matter of how contagious does this become. We certainly saw before where you had Silicon Valley and others, and then the fear just led to everything kind of going down because no one was quite sure what was going to happen and if there was going to be a credit crunch there. What about the 10-year Treasury? Zero TNX is what we use on MarketSmith. Um, we've got the Fed meeting coming up. This has been kind of, it got up above 4% and then came down to the 50-day, and now it seems like it's on the rise again.
Yeah, you could argue if this were a stock, you'd say we had a breakout, came back, but found support and is back above the buy point. I mean, I'm not, it did seem to this is a key area right here around the 385 level, and it just blew right past it. Uh, this was a big reason why the market rallied. That really nice strong rebound to highs.
Mhm.
That was a big reason. Now we've come back up. Oh, look, the Fed meeting tomorrow. China stimulus is out there, and I think that's a feeling is that's going to boost global growth. We saw a lot of industrial commodities. We've seen oil and copper move up. So a lot of things on those lines. A lot may happen tomorrow, but the Treasury yields are no longer being that tailwind that they were for a little while there.
Right. And to just kind of wrap up, you mentioned the breadth today wasn't too bad. It looks like RSP was slightly underperforming the S&P 500. I'm showing that it finished, a little bit flat, maybe up 0.1%, whereas QQEW, which is the NASDAQ 100 equal weighted, that was up about 0.4%. So not too bad. Advancers on the New York Stock Exchange were about even with the decliners, about 1,500 to 1,400. And then the decliners really outpaced slightly on the NASDAQ composite, about 2,400 to roughly 1,900, or 2,000 decliners. Also, let's take a look at SMH, which is the semiconductors, a big area of strength and one that had a nice bounce off the 21-day today.
Yeah, and it'll be interesting to see how this plays out with Microsoft and Google earnings tonight, and then Meta tomorrow, because they're buying a lot of NVIDIA chips. All this stuff. To be honest, that's what's going on. Nice bounce here. This SMH was definitely led by NVIDIA.
Mhm. We also had IGV. You've got Microsoft in there, and Adobe, some really big players in there representing software, and of course, computer software enterprise has been one of those areas that really came back from the dead after getting hit through most of 2021 and 2022.
Yeah, and we'll just see that again, really held up very well, held up the bulk of its gains, much like the Nasdaq, just continuing to move higher, doesn't want to come down.
Hmm. And then industrials, XLI. We were talking about this yesterday. That's showing a little bit more strength, and XME, as you mentioned, the China stimulus may be putting some upward pressure here.
Definitely. I mean, we saw a lot of mining stocks and take a look at Nucor, steelmaker, but a lot of mining stocks flash buy signals today.
And then finally, energy, XLE, dominated by ExxonMobil and Chevron, but you're seeing a lot of these oil and gas plays coming back from the dead.
Yeah, and nothing like, a bunch of, crude oil prices are at 4-month highs or 3-month highs, and that does a world of good. That's ultimately was what's going to drive these stocks.
Mhm. Well, speaking of the Chinese stimulus, let's go ahead and get into some stocks, and we'll start with a Chinese name, one that I'll be honest, I just wasn't familiar with until David Ryan brought it up on the IBD Live show this morning. David Ryan, of course, being a three-time U.S. investing champion that is on weekly on IBD Live. But the stock is Miniso. I'm not sure how it's pronounced. Ticker symbol MNSO, and I guess Ed, you just found out that there's a store near you.
I know. See, I don't go to the mall that often, but the mall right by my house has one of these. So I'm gonna have to check it out. So it's a discount and variety store. So it's a Chinese-based retailer, but it's in like 80 plus countries. It has a bunch of stores in the U.S. and in Canada. So definitely something there. It specializes in household consumer goods like kitchenware, cosmetics, toys. So this one's been doing well, and this is one of the things here is that this is the importance of running screens because there's no way you're thinking this was just going to pop in your head. I'd like to see what this stock is doing. I mean, even if you're aware of it, it's probably not one of the names that you're really thinking I've gotta always be checking this. But this set up very nicely. Really, 26% consolidation, but after a huge move here,
Mhm.
uh, came up, then blasted out yesterday, held on those games. You look at the fundamentals; they're strong. The volume has been strong lately. It's except for a couple of days, it's been a lot of blue bars in the past several weeks. So a lot of things to like here. I mean, it's fine to be digging out. This is one you can always probably might be able to check out close to where you live. Maybe not, but it is really interesting to see this name here.
Yeah, or you can just invite everyone over to your local mall, have them over for
Sure.
coffee and everything. Now, China for a while, I mean, that was in the penalty box. I mean, with what was going on, their kind of uh, relationship with business, let's say, and delisting fears, everything that was going on there. Um, you know, you look at FXI, which is a ETF that represents the Chinese space. It has a lot of the big China 50 index in there. Very different look to this. I mean, this is just gotten above its 200-day moving average line and 50-day moving average line, whereas MNSO looks much stronger. And there are a lot of names. Some of the automakers in China, some of the internet content, those guys. So is China getting safer, or is it still a be careful?
Yeah, and you still have to be careful. I mean, the COVID restrictions are over. There seems like the tech crackdown is in the past, but you never know. I think and their economy is not great. I mean, it's rallying because Beijing is sort of desperate to prop up the economy, and they're going to do that. So it's still a lot of issues there. I still think investors should be cautious with those things. This is internationals, which helps, so it's not entirely dependent on the Chinese economy. But you have to imagine that a huge amount of its business is in China. So definitely be careful and be judicious with these choices. As you say, a few stocks are doing much better than some of the ETFs.
Mhm. And then with that stimulus, that's also, as we noted, affecting a lot of the materials stocks, the mining stocks. And Nucor, of course, is a steel producer. This one, again, was one of the darlings from when the market wasn't doing so great in 2022. Had some good moves there, and even back in 2020 and 2021. Uh, Now here we are in another pattern, as it's potentially breaking out of a little handle here.
Yeah, so it reported earnings last night, and honestly, the earnings were okay, and the guidance wasn't that great. So this was for a while trading lower, and but it found support at the 21-day line. This is a handle, even though I like to think of this, and this is a gigantic base, but I like to think of this as its own base right
Right.
here.
Hmm.
And this is so this is a proper handle, and it got above there, and it got above there and above average volume. This is one where you're definitely betting on the future because the earnings are getting, are falling a lot. The sales declines are getting worse. Now that's probably going to end just because the comparisons will get easier. But you can see this is not supposed to turn around until probably late 2024, if not 2025. So just keep that in mind. A lot of those plays are definitely something that's down the road, but this one is showing strong technical action. As you said, this was a big winner a couple of years ago. Of course, a couple of years ago, it had the enormous profit growth. Now
Right.
that's not showing it. So, it's just something that to be aware of is that, and that's happening with a lot of things. A lot of the tech sector, a lot of areas, Tesla, a lot of it's see you next year or we'll see you in 2025
Yeah.
and there's been that optimism and you just have to recognize that it's better when the earnings are there, but as an investor you can't ignore this kind of strength.
And there are some of those times where the future might look bright, and that is enough to make a stock go up, even if the earnings aren't there. And you don't have to look much further than Nvidia, whose earnings weren't that great when it started its move of 100% not too long ago. Let's go ahead and move on over to Synopsys. We talked about the chips, SMH, Vanex Semiconductor, ETF, and Synopsys is in the computer software, but is very related to chips. How so?
Well, its software helps you design chips and electronics, and so it's actually in IGV and SMH
Hmm.
along with its peer Cadence Design. And what's nice here is that okay, there's Synopsys doesn't have earnings for a few weeks, so that risk is not there. But we just had earnings from Cadence Design, and be honest, those were just okay. They weren't Their guidance wasn't great, but Synopsys reacted well. It bounced here off the 21-day line, sort of breaking a trend line of a handle. This is marking as a flat base. I see it more as a cup base, and this is now, if you do see it as a cup base, this is now a valid handle after today, because this is
Right.
now 5 days old. So that would be another buy point just right below here. Either way, it's pretty close, but you could use this as an early entry, however you define it. So this is one that has pretty solid growth. I mean, the growth has been slower lately, but unlike a lot, and it's supposed to fall in 2020 fiscal 2023, but not tumble like a lot of other names and then pick up again. So this is one. This was a long-term leader, but more relevant to right now is that it was added to Swing Trader today.
Right. And we added it early on in this morning, and the volume did look like it was going to be stronger, but kind of tapered off at the end. Could be folks are waiting for those Fed notes and some of these earnings for the mega caps to get behind us. And as you mentioned, long-term leader status. If you look at the weekly chart, this is one that has an EPS growth rate of 23%. Not too shabby, but an earning stability of 3, which means that the earnings are very stable on this one. Any parting thoughts for investors before we close this out, Ed?
Well, I thought I'd just show people a little bit. Microsoft beat views. Haven't seen it. They won't give guidance for a while, so that'll be very important. Sometimes that really moves it. It was down more. It's coming back up. Google, I think those were pretty strong numbers. That one is bouncing here. It sort of has this, so it might get above. Looks like it's going to be a breakout from this cup with handle right now. So that's encouraging. It would be interesting to see what they have to say. These two reports in particular could have a lot to say about artificial intelligence, about cloud computing, and some other areas. So this will be really important for a lot of other companies that are related to those spaces.
Yeah, so definitely ones to watch, in addition to a lot of other mega caps that we'll be reporting later on, and the earnings tsunami will continue throughout the coming weeks. So thank you very much for your color commentary there, Ed, as always. And don't forget, folks, that you can always catch a live show, the IBD Live, at investors.com/IBD Live, where we are on the air from 10 minutes before the market open until about an hour and a half into the market session. So if you want to kind of see what's happening live and get our real-time thoughts, please join us there at investors.com/IBD Live. And that'll be it for this show. Thank you much for watching, and we'll see you next time.